So if you're a business owner and you have an accountant, I think it's a good idea to have a good working relationship with your accountant where you're asking them questions, they're asking you questions, so that you can really optimize your accounting, financial, and tax situation for your business. And what I find in my line of work, in working with a bunch of small business owners, is a lot of times they maybe don't have an accountant, they can't find one, or the ones they do have just are not that engaging. Their accountants just take what they give them and they file it, and there's not much conversation there, which I think is not good, because a lot of times business owners just don't know what they don't know. And if the accountants aren't asking them those questions and making them aware of those different things when it comes to running a business, then those things will get missed. In my opinion, I think it's an accountant's professional responsibility to, talk to their clients and prompt them with different questions about their business, about their tax situation, about their personal financial situation, to, get the most out of their business and implement the best tax strategy that they can for the business of the business owner. And as business owners, I think we do need to take it upon ourselves to learn more about bookkeeping and accounting and taxes, so that we have a better understanding and so that we can advocate for ourselves. I hear this in the medical industry where sometimes you have to advocate for yourself because sometimes the doctors aren't going to speak up or ask questions. You kind of have to push them a little bit for answers or to get more testing or whatever that may be. And I see it the same way in business. Sometimes you need to ask your accountant and prompt them and do your research so that you can ask those questions to make sure that you're getting everything correct. So if you have an accountant that's not that engaging, you either engage them more or find one who is. But again, good for a business owner to familiarize themselves and research and learn more about business financials, financial reporting, business taxes, things like that. So that all being said, I made a list of questions that I think are important to think about and potentially ask your accountant if you are a business owner. And so in this video, I'm just going to quickly go over that list. So the first question is, are assets that are owned by the business or being used in the business properly classified as assets and properly depreciated each year, claiming that depreciation expense? Because if you have expensive assets in a business, claiming depreciation is not only permitted, but it could create a big expense that reduces your business taxes. And this is something that can be maybe overlooked because sometimes business owners aren't aware of this, or because there's no money moving. So it's obvious when money is moving for something like paying for business insurance or rent, but with depreciation, money is not moving, but it's still an expense that you can claim. So this is really important to make sure you are claiming your depreciation expenses for business assets. Now the second question is quite similar, but it's, are you using personal assets in your business? And if so, are those being claimed for depreciation? Now, if they're personal assets that are only being used partially in business, then you don't get to claim the full depreciation expense. You just get to claim a portion based on how much of the personal asset is used in business, but still very important to claim. So by personal assets, I mean maybe your vehicle, maybe your computer, maybe your phone that you do use for personal use, but also in part used for business use. You can start to claim depreciation on those in your business if you do legitimately use them for business purposes. Third question is phone use. Are you using your personal phone in business? And now I covered this a little bit already, but now I'm talking about the monthly expenses for a phone bill. Yes, if you're using your phone in business, you can start to claim a depreciation expense for that asset in most cases. But now if you also have a monthly phone bill and you're using your phone, 50-50 personal business, then you can claim a part of the monthly phone bill as a business expense. Now the fourth question is vehicle usage. And again, I talked about vehicle usage depreciation, but also like a phone, if you're using your vehicle for business purposes, now you can claim a portion of your expenses for your vehicle. And so the expenses for a vehicle that you could potentially claim would be like your fuel, oil changes and maintenance, vehicle insurance, things like that. So again, if you are legitimately using your personal vehicle for business purposes, in part, you can claim some of those, ongoing expenses outside of depreciation on the taxes of the business. The fifth question is home use. If you have a home office where you conduct business activity out of, then the same thing. You can claim a portion of your home expenses as business expenses. So that may be rent or mortgage interest, could be utilities, could be insurance, things like that. And also with home use, it can even be capital cost allowance depreciation of the property as well. So very important to be aware of this as well. Next thing, question number 6 would be travel, entertainment, and meals. So if you are traveling for your business and outside of using your personal vehicle, like if you're taking flights or whatever, if you are going for meals, especially where you're taking clients out, if there are different maybe entertainment expenses where maybe you're taking staff out, things like that, a lot of those expenses can be claimed as business expenses, at least in part. So it's very good to be aware of that as well. Seventh question is personal health insurance premiums. Depending on your jurisdiction, of course I can't speak for all jurisdictions, but here in Canada, in most cases, you can claim personal health insurance premiums on your taxes, especially if you are running a sole proprietorship or a partnership business. So might not always be possible, depends on the situation, but it's a good question to ask and something to be aware of. Now the next question number 8, are you overclaiming expenses? I see it go both ways, where people are missing out on things they should be claiming, and then in other cases, they're claiming things they should not be. Maybe claiming the phone bill expense for their teenage children who really have nothing to do with the business. Their phone usage is not related to business activity whatsoever, and so they shouldn't be claiming that. So that's maybe another question and a conversation to have with an accountant to make sure that you're not falsely claiming non-business expenses as business expenses. Next question, number 9, to discuss with your accountant. If you are required to be signed up for a GST account, at least here in Canada, are you signed up? Are you collecting properly? Are you remitting properly? Are you completely compliant with your GST requirements as a business? Question number 10, if you're not required to be registered for a GST account, should you voluntarily register? Are there some benefits for you registering even though you don't need to? There can be some major benefits in some cases to do that. So that's another good conversation to have with an accountant. Now, question number 11 is still relating to GST. If you are registered and if you're charging, collecting, remitting, doing everything properly, what about input tax credits? Are you properly claiming those ITCs? Because even if you're compliant with collecting and remitting, it's still possible that you are overlooking ITCs and not claiming those. And that's money back for you, or at least a reduced amount of money you have to pay forward in GST. So very important to be aware of ITCs. Next question, number 12. Are you PST compliant? And again, this can depend on the jurisdiction, but where I live in Saskatchewan, pretty much all businesses need to be registered for a PST account. On many products and services, they have to charge PST, they have to collect it, and they have to remit it, kind of similar to GST. So obviously that's something to be aware of, and a conversation to have too, is just making sure that you are properly set up, charging, collecting, remitting, filing, all those things. Now the next question, number 13, if you are registered for PST, and in your jurisdiction, if it's set up where you're not supposed to pay PST on like intermediary items, where you're purchasing items that you're going to then resell, in some cases you're not supposed to pay PST on those items. So if it is the case that you're not supposed to, make sure you have that conversation with your accountant and make sure you're not paying PST on items that you are paying to then sell to customers, where you're just a retailer, you're not the consumer of them. The next one, question number 14, what makes more sense? Should you be paying yourself dividends, salary, both? What combination of them? Neither. And of course, this is just for businesses that are set up as corporations, but that's a very important conversation to have as far as tax strategy goes with your accountant. And now question number 15, legal structure. Are you operating under the optimal legal structure for your business and for your situation? Just because you started out as a sole proprietorship doesn't mean that's still the best for you. Or just because you incorporated your business doesn't necessarily mean that the benefits you're getting from that outweigh the downsides of having a corporation. So that's another conversation to have with an accountant, and maybe even with a lawyer or a business consultant like myself to have a more holistic view of it, because there is the financial and tax perspective, but there are other considerations when it comes to incorporating as well. Now the next question, number 16, and this might be something to have a financial advisor get involved in, but if you are a business owner and you're wanting tax strategy, are you utilizing accounts like first home savings accounts or RRSPs like we have here in Canada? Because this can impact your financial situation and your taxes, and that can impact which legal structure is best for you. Because maybe you're making a lot of money through a sole proprietorship, and so maybe your accountant's thinking you should maybe incorporate for more tax strategy. But if you can just utilize RRSPs and FHSAs, then it might not make sense to incorporate, even though it otherwise might. The next question, question number 17. Should you change your fiscal year or your tax year or your financial year for your corporation, or even if your business isn't incorporated? It's more common and simpler for a corporation to change their tax year instead of it being January 1st until December 31st. And sometimes it makes sense to do so. But in some jurisdictions like here in Canada, you actually can change it for sole proprietorships and partnerships as well. But this can be a good conversation, especially for certain businesses where, for example, maybe rather than having your year end at the end of December, maybe you want to change it to the end of August. Then you're focusing on taxes September, October, November, December kind of thing. Maybe you're business is seasonal and it's better to do it at that time. And also, oftentimes you can get cheaper fees from an accountant to file your corporate tax return if you're doing it in their off season. So especially if you're doing something maybe like landscaping and snow removal, maybe it just makes more sense to have your year end at the end of March where the seasons are kind of ending, so that your winter contracts and your summer contracts fall within one fiscal year rather than going across 2 fiscal years. And then lastly, question number 18, what are the future goals of the business? Are you planning on growing it? Are you planning on selling it? Are you planning on taking other business partners on with you? Are you planning on shutting it down, closing it, opening other locations, franchising it? All those things matter too when it comes to your financial situation and accounting and how you're structuring things and how you're operating. So that was just a quick list of 18 questions that I think are important, not only just to ask yourself and think about and research, but to have with your accountant, just to make sure you're doing everything correctly, you're putting yourself in the best position for your business to succeed now and in the future, and that you are able to achieve your goals and find some tax savings options as well. So hopefully this video was useful. If so, please click like, and feel free to come check out my YouTube channel here and subscribe, where I currently, as of today, have 300 videos that cover business management and business startup topics, and this is actually the 300th video, so feel free to check out the channel. Thanks.